Hello everyone. Welcome back again. In this episode, I'm gonna be teaching you some things. I'm gonna do a trade recap, which is not the important thing, and then I'm gonna teach you something very important, which is ranges, and then why I want to sell gold at this zone, not in on any other zones. So in this video, I'm not going to go into depth of directional bias. I'm gonna teach you something very much important, which is called range. How you can use range to determine where to sell and buy, because range is what smart money use to execute their order, the premium and the discount range. I only use SLP as my entry, so don't expect I use SLP strategy. I only use SLP for my entries. I don't use SLP to determine my range or my directional bias. So if you're new to this channel, so welcome back, and then as always, let's continue. So let me do this. The first thing I say is to know your bias. If you don't know what directional bias is, oh, okay, you know what to do, but it's to know your bias, to know your directional bias, where sell is coming from and where it's going from. So and I'm not really here to teach you directional bias, I'm going to teach you range, which is one of the most important things. So based on directional bias, if you learn what directional bias is, you know where this sell is coming from on gold. This is gold, 1 hour time frame. So after that, then you use your lower time frame structure, which is what the SLP that I use SLP for my structure. I only use SLP for structures, but I use to trade inside a range, which is what I'm going to talk to you about. Based on what you can see, this is a high time frame structure from here to here. It's a high time frame structure. So for me now, personally, I want to see a high time frame structure shift before I look for sales. I don't use lower time frame. Yes, because it's very risky. Based on what you can see here, there's a lot of people that will, okay, this is market tapped into this daily order block. So I will look for my SAP structure, which is what your breakout structure, this first pullback as your inducement, and then market mitigated point of interest, which is much more clear in the lower time frame. So if you go 30 minute time frame, this zone, there's a breakout block there, which is much more important, which is much more valid. It can help you maximize your risk reward, and then by taking unnecessary losses, because anything that would take market to the zone, you know that this is your invalidation zone. So there's no reason for markets to visit this if you really want to sell. So you can take your first sell from here. But for me, I did not take this first sell because of what I wait for higher time frame structure to get broken first, because all of this, sorry, my network. All of this range, inside this range is lower time frame. I want to see high time frame range got broken. This low, this is my low in the 1 hour time frame, because I'm using high time frame first for market structure shift. That's what I say. If you've been on my channel, said taking first trade after structure shift or let's market by invalidate this low is very risky. You can still take the trade, but there's high probability this one might take out, might not be respected, because on time market might fall into a range, started respecting it because it's a high time frame order block or breaker block, and then come back and just keep buying. It happens most of the time on gold and BTC. You know what I meant when I said that, right? So that's why I did not take the first sell from there, because I know something's happened, because this is my range. I want to work between this range from here, from this range, this low. This is my last low in the high time frame that was this breakout structure. So this is my range, this high and this low, right? So for you that trade lower time frame, you use your SFE. I only use SFE for my entries, as I said. SFE is not a strategy I trade. Actually, I combine it with the strategy I trade. So I'm trying to explain what range is, and then I don't want this video to be long. So let me just get into it. So I want to see a lower, higher my previous structure got broken. This one, this is why I'm expecting structural shift to happen in the higher time frame. So after we got this structural shift, I look for my what? SLP strategy to form, SLP structures, which is why my space pullback as what? Inducement is high. Then my point of interest, which is what? The breaker block or the order block. And I don't just jump in and started looking for sales at the breaker block just because it closes to my liquidity. This is very wrong. That's why I said I use range. Use range? I use range by marking my previous swing high and swing low. After I got this broken, why is the high that caused the breakup structure is this high, right? This is the high that caused this breakup structure to the downside. So this is part of my range. Why is the new low? This is my new low. So this is the range I'm going to trade with. This range. These are the range I'm going to trade with. Then you can use Fibonacci, depending on the strategy you trade. You can use Fibonacci, or you can guess, or you can mark the zone and divide it into what? Freemium and discounts. You don't want to sell market at the discount level, and you don't want to buy market at the premium level. So if you divide this box into two, from discount to premium level, so you know where premium level is. And at this zone now, sorry guys, at this zone now, market is very expensive. Why? Because it has premium zone. You don't want to look for buys at these kind of zones, because this is how smart money will use to take their order because of these zones. So you see, this is a premium zones and this is a discount zone. So market is, that market broke this external low. That market is still confirmed. We know that by breaking this low, confirm our what structure. That means we're still bearish. The first thing you need to understand is what? Knowing market's broken structures. That's determining your what? Current bias. So you can use different time frame for a bias spots. For the sake of this one, I'm gonna rush things up because I don't want this video to be long. So after this broke, I have a range, two range to work with, the high and the low. So inside this range, then I determine which one is premium and which one is discount. I know I'm bearish, right? I'm bearish, but I'm not want to buy at a discount level. Sometimes you might have your structure formed at a discount level where market is at cheaper price. Investors want to buy at this zone, so you don't want to sell because you're not the one controlling the markets. So sometimes you might have your structure inside this range. You might have your structure inside this range, and then still market might what? Disrespect it because you're trying to sell low. Instead of trying to sell high and buy low, you're trying to sell what? Low and buy high. This is very wrong. So this is the range I'm trying to look for sales, which is what? A freemium. Price is at expensive here. If let's say this, I want to sell the asset of this gold at this zone, gold might be let's say 3,000 per share. So at this zone is going to be what? 4,000. So that means this is expensive. So you want to sell something that's expensive because you want to get profits. You don't want to sell something as at cheap. You'll not be getting profits. So if I sell a car now, I sell this car for 100,000 naira. So, and I wait for markets to come to this zone. This is a 200,000 naira. A lot of sellers will be waiting to sell at this zone because this one is much more expensive. I'm going to make a lot of profit than selling at this zone. So even the psychological fact, you see that this is not a very good place to sell from. So after this, I mark my range based on this structure that I see, right? So after this, then I mark my range. Any sell that is not coming, I'll not be looking for sell anywhere in this zone because your structure can be easily formed at a specific level. Your SLP structure can form at this range, this discount range too, from here to here. There's a lot of scenarios where you can see your structure at at this range. And a lot of you will just be looking for sales there. A market will use it as an inducement. It will take you out because you're trying to sell market as a what, where you should be buying, not selling. So it's not always about strategy, higher, low. You need to understand range. So because of that, even if I see structure there, a SLP structure formed at this zone, and I did not see a SLP structure formed at this zone, I'm not going to sell market from here because I'm in discount level. It's going to be very, very risky to sell market from. That's why I'm going to wait for markets to come to a discount level. That's why you see I choose this breakup block. Not because it's closest to my liquidity, but because it's inside my range, which is what? Premium range. Do you understand? So had it been, let's say this breakup block is not inside my premium range, is in discount level, I'm not going to take the buy. It's not always the strategy. It's not always liquidity closest to inducements. You know what I meant if you've been a good trader actually. So I work for the order block because it's at premium level, and then it's the best time to sell. It's the best zones to sell the market from. The market is expensive at this zone. So if this order block now, breakup block is at discount level, even if it's closest to my liquidity, I'm not going to sell. You have to apply the logic. It's not always to be like that. Do you understand? So I'm trying to sell the market from here, right? Then after that, then I look for new range. That's why I sell the market from here. I took this. So if you've been following me on X, you know that I posted everything. I document everything on X. You can go and check. I took this trade. So the next thing is what? Look for my new range. What is my new range? I need to look for the current structure. What is that current structure? Market breaking structure to the upside. Do you understand? To the downside, that's confirm my structure. So after this breakup structure to downside, so this confirm my what? Structure. That's what do I have? Then I marked my range. I have two range to work with. This new low that market broke, and then this new high. This is my range. This is my swing high and swing low. Then I marked my range from here to this zone. I want to divide it into what? Premium and discount. Any label that is what? At premium zone, I'm not going to be looking for buys. And anywhere that's at discount level, I'm not going to be looking for buys. So look at this arrow. Let me use it like 3 times so that I understand. So this is my range, right? So you can have your structure formed at this zone and you're not still going to not respect it. What I mean by that is, you see, you have an order block there. You have an order block right here. So you see, after this breakup structure, market come to give you that confirm your structure, right? You're bearish, and then you have an order block there. Even if you sell from there, because you're selling from a what? Discount level, you're still gonna get stopped out. Even if you have all of the confluence you want to see. After the break, let's say you have an inducement, right? Then another break to take out the low of the inducement. So still you want to go stopped out. So you see, it's not always about higher highs. It's not always about this your structure to form at the any random place. So you have to look off, mark to your what? Discount level. Then look, if you have an SLP structure at that discount level, is fine. If you don't, you go to the extreme, which is what? Your order block. But if you see we have a structure, SLP structure at that level, breakout structure, I don't want this video to be long, so let me just hurry. And then your liquidity as per point of interest, inducement, first pull back after your break, then your what? Breaker block at this other block. So you see, you have a range now. You take the sell, not just random, because you might have your structure in these zones, but still market will not respect it. So you need to understand this. Then you have a new range to work with, which was this new low. You need to confirm your bias or your direction says again, which is what? By breaking structure to the downside, then you marked your range. This, and then, this, and then what? This range. This is your swing high. Though this one is not the one that caused the breakup structure, but I don't want to go into the deep teaching because I'm not here to really teach people, pay me money for this. So let me just look for that. So inside that range, then you determine your what? From your new low to your new high, then you determine what? Your range. So if you see that, you see this is where you have, this is the what? Middle of your range. Let me, so where is the low? Okay, this is the low. Okay, and then this is the high. So this is your what? This is your range. So you delete this box. You can use Fibonacci, or you can use the other types of how you can determine range. So you have a 3 range to work with here, right? So you don't want to sell from here because this one is what? As a what? Discount level. You don't want to sell from here. So you know that market is still bearish, but you don't want to sell from here because it's what? It's a discount level. So then you look for your what? Premium level, which is the range of this range. Do you have your structure? That means I'm not going to sell from here. So even this order block now, that a lot of you guys are waiting to sell from here is going to fail. Mark my words. Because what? You look for your structure because you have this logo taken out. And then this first pullback as your liquidity. And then you use this high time frame, this order block, is still going to fail because you still, though you're in a range of premium and discount, but still not going to hold. I'm not going to sell it from here because it's still at a what? Discount level. So what do? I look for structure in my what? Premium zones. So what are my structures? I'm not going to go into deep teaching here. So let me just try and do it. After you see this logo broken out, I consider this as a breakup structure because this is a high time frame. So Swift on the high time frame is a clear break in the lower time frame. If you don't know what this, you have to ask your mentor. So market is selling from this zone, right? Actually selling from this zone that has liquidity. So I know that it's a very good zone. Market has tapped into this supply down to sell down. So I looked for my range. So I consider this as a breakup structure, my market structure shift instead of this low. So I will use this as my liquidity. Then I'm selling gold at this zone. I'm selling gold at this zone. This is why I'm expecting to sell gold next week. And what happened if this zone got invalidated? Then I look higher time frame. You see, based on how market is approaching this zone, it's respecting structure. So all of these highs has been tested. So if I have structure shift now, how? Right? I'm going to look for buys all the way to clear this high loss. But that does not mean I'm still bullish on gold. I'm going to use 1 day range. I'm going to use high time frame range. So I go to 1 day time frame and mark my range. Where's my range in the high time frame? I look for what? Confirmation of break of structure. What? By having this break of structure to the downside, right? So if I have this break of structure to the downside, why do I have? I have range. I want to mark my range. This new low, right? And then what? This high that caused the break of structure. So this is my range. So I'm going to expect markets to pull into this range. And then before I look for continuation of a sell, because I'm still bearish, there's an order block there. You can refine it to 4-hour time frame to look for it, because this is your range, trading range in the lower time frame. So in the higher time frame, even this one, you go structure shift, you'll be buying and buying all the way for gold to come to this zone, because this is also part of your range. Gold to come to this zone for you to what? Continue selling down. So still, you see how you can use range. So I don't want to this video to be long. So guys, if you enjoyed this video, don't consider following me on X and then TikTok or YouTube if you're from YouTube or TikTok. So peace out. Bye guys.